Assalamualaikum and hi. Just now I have posted in my blog regarding the partnership accounts. The name of the exercise is stay home. Okay, stay home. Okay, now I'm going to show you on the video how we are going to settle on that problem. Okay, now we go to Excel as usual. No, not yet, not Excel. We go to the question. So this is the question. Okay, partnership accounts, stay and home are in the partnership business and the following trial balance was extracted from the books as at 31st December 2019. We have capital accounts, current accounts, drawings, sales and purchase, staff wages, rental, repairs, advertisement, bad debt, stationery, bank cash, motor vehicle, office equipment, receivables and payables, inventory. This is opening inventory. Trial balance is balance, and look at the okay, we have the additional information. Okay, this is normal, the closing inventory. Modification to the motor vehicle was wrongly debited. Okay, we can see this is errors. This is also, I can say, is an adjustment. Office sessions accrued adjustment as well. First time depreciation for motor vehicle and equipment 20%. So 20%, if the question is silent, so we assume that this straight depreciation is a straight line method, 20%. Interest on capital, okay, this interest on capital and interest on drawings. So this item will be used in the profit and loss appropriation accounts. And profit sharing ratio is 2:3. Okay, also in the profit appropriation accounts. And look what is being required. You are required to prepare statement of profit and loss accounts, statement of profit and loss appropriation accounts, and partners current account. So we have three. So there is no statement of financial position. In that case, we can just ignore that. By looking at the question here, we have sales and purchases, staff wages, and then also expenses here. We know that we need to do the statement of profit and loss in order to get our profit. And then that profit, we will post it to profit and loss appropriation accounts and then deduct with our interest on whatever, interest on capital, interest on drawings, interest on loans maybe, but here we have only interest on capital and interest on drawings. Okay, let's go to the Excel. Alright, now I have opened an Excel and I also have copy and paste it on the Excel format so I can always refer side by side. Okay, we start with sales. We have sales. How much is our sales? Is 450,000. So I just 450,000. Just copy that. And then after sales, normally we have return inwards, but we can see here there is no return inwards whatsoever. Okay, no return inwards. And less cost of goods sold. Cost of goods sold. Cost of goods sold consists of your opening inventory at, how I spell that, opening inventory, and add with your purchases. We don't have any return outwards or even carriage inwards, and then we just straight to closing inventory. Okay, now we fill in opening inventory. So I think we have somewhere around here. So this is opening inventory. So 7,500. So because I'm very lazy to write, I cannot write over here, so I just cut and paste. Okay, purchases is here 260,000, 260,000, and closing inventory here 10,500. Because remember that we need to minus the closing inventory, so I put 10,500 negative. You can see this in the bracket. Okay, I sum this all these figures, so I can get the total cost of goods sold, that is 257. Sales minus cost of goods sold, I will get gross profit. So my gross profit, to make it negative, I multiply with negative 1. Okay, 193,000. So I hope you can get the same answer with me. Okay, after gross profit, we need to add with other income. Remember, other income is always at the credit side of the trial balance, but here we have capital accounts. This is current accounts, that's a bit weird. And then also a bit weird, it's okay. And then this is our sales and bank. Oh, we have bank overdraft, and this is our payables. There is no items that show us the other income. Just proceed to less expenses. Expenses we have, starting from here, from the top, sales and purchases. Okay, this one. Staff wages, rental, repairs, advertisement, bad debt, stationaries. Bank cash, no. Okay, so until stationaries, from staff wages until stationaries, I just copy and paste, and I straight away put the amount. Okay, so how fast I'm using the Excel. But in the exam, you still need to write. Alright. Okay, so we have all these figures here, and we need to do adjustments. So look at the adjustments. So these are the adjustments. Okay, so we can settle one by one. The first adjustment is this one. Modification to motor vehicle was wrongly debited to repairs account. Should be modification to motor vehicle. You modify your motor vehicle, and your motor vehicle, the value of your motor vehicle should increase. But here you wrongly debited to repairs account by 4,000. So you debited to the repairs account. So this 8,000 is not actually the real figure. So it shouldn't be 8,000. It should be lesser, because the 8,000 consists of your modification to motor vehicle. It should goes to the motor vehicle. Then we go to repairs. Take 8,000 minus with 4,000. It should be 4,000. Okay, the first one, the first adjustment settled, complete. Staff wages was prepaid 5,000. Look at staff wages. So this is our staff wages, 84,000. So this 84,000 consists of the wages that been prepaid. Actually, the amount should be lesser. So I go to staff wages, I take 84,000 minus with how much just now? 5,000, and I should get 79,000. 79,000. Third one is office stationeries was accrued. Accrued meaning that you haven't paid yet. The expenses already been charged, but it's not being put in the trial balance, or it's not being put in the office stationeries. What is office? This is stationeries, 4,000. So 4,000 station 4,000. So when you have an accrued, actually the amount of stationeries that you incurred is more than this 4,000. Okay, so accrued you need to add 4,000 and then you add by 500. Here you have 4,500. Okay, one finish, this one finish, this one's finished. First time depreciation for motor vehicle. So we don't see any depreciation over here in your child balance. So in this case, we need to provide the depreciation, and it says the depreciation for the first time, meaning that there is no depreciation before this, and you need to calculate. So the first one is motor vehicle, second one is your office equipment, and just now I said depreciation. This question depreciation 20% is silent, so we assume that this is a straight line. But even though it's a straight line or reducing balance, but for the first time depreciation normally, and it has to multiply with the cost. So the cost of motor vehicle is how much? 75,000. 75,000 and multiply with the rate of depreciation is 20%, so 15,000. What about office equipment? The rate of the cost of office equipment is 20,000 and multiply with the rate of depreciation 20% as well, so I got 4,000. Alright, first time depreciation, and then after that interest. This one belongs to profit and loss appropriation accounts, so we need to calculate our profit first before we go to the profit and loss appropriation. Okay, so I should total this up. Take all of this, all the total expenses to be sum up here, and I shall get my net profit. Then we can go to profit and loss appropriation accounts. Okay, I need to put negative over here because I need to minus the amount. So now it's negative because you can see here this is less. Okay, so less. Okay, from here 11,500. Okay, 11,500 is the net profit. Then we proceed to profit and loss appropriation account. Because I'm very lazy to type, I just copy stay home and associates statement of profit and loss appropriation account for the year and blah 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 blah. So put RM over here, RM over here. Okay, net profit. Of course, we have to use the same net profit that we got from our profit and loss account. That is 11,500. So I just put the 11,500. Okay, next is either you want to add or less. But I'm sure you love to add first because you love adding something. Okay, so what you need to add? Because we are now doing the statement of profit and loss appropriation accounts, because this belongs to the partnership, to the business. So of course, to the business, something that will give revenue to the business or to the partnership, you need to add. So from here, comparing from interest on capital and interest on drawings, which one is the revenue to the partnership? Of course, the interest on drawings, because the partners made some drawings and they need to pay the partnership sum. So I just put here add interest on drawings. So interest on drawings, first is stay, second is home. Okay, how much the interest being charged for the interest on drawings to both? That is 10%. So let's put it 10% and also 10%. How much drawings that made by stay? So drawings made by stay, we look again, is here 9,300. So I take 9,300 and home is 11,500. So how much is the total interest? So I take 10% multiplied by the total drawings, 930. Same goes to home. I take 10% multiplied by 11,005 is 1150. So the total interest that needs to be added here is 2080. Okay. After the interest on drawings, only that, only we have interest on drawings only. The rest we don't have. Okay, so we move on to what we need to minus or less, that is interest on capital. Why they need to less? Because this is partnership. The business need to pay something to the partners. So the partners give the partnership a capital. So they charge the partnership, they charge their own company. And they charge their own company on the interest, on the capital that they contributed. So I take this stay home. How many percent? 5%. So 5%. This is also 5%. How much is the total drawings? Not drawings. Total capital contributed for stay is 30,000, and for home is 120,000. So how much is the total charge or the total interest on capital for stay? So I take 5% multiply with the total capital, I get 1,005. Same goes to home. I take 5% multiplied by 120,000. I got 6,000 for home. So the total interest on capital is 7,500. Okay, because this is less, as usual, I need to multiply by -1 so I can get the negative sign. So here I put profit or loss, profit and loss to be distributed. How much? Let's see. Okay, from here until here, 6,080. Stay home, Stay home. You only got 680 to be distributed among stay and home. You stay home, you don't get anything. But if you stay home, you'll be safe. Okay, now let's look at how much is the profit sharing. The profit sharing ratio is 2 or 2 to 3. So stay will get 2 and home got 3. So 2 over 3, 2 plus 3 is 5. So I just 2 over 5. I got, how did it happen? Okay, no, I know. I just change it to number. Now 2 over 5 is 0.4 and 3 over 5 is 0.6. Okay, so how much is the total profit to be distributed? 6080. Same goes to home. And how much stay got? 2432. Okay. And home 60% from the 60803648. And the total it should be the same, and I'm confident it is the same. Okay, so this is statement of profit and loss appropriation account. See, we're finished. So we have already answered the profit and loss account. So this is the profit and loss account, and we have until we got the answer of 11,500. And second question is profit and loss appropriation account. So this is profit and loss appropriation account. See, both of them got the profit that's been distributed among themselves. Okay, after this we need to do the partner's current account. Okay, partner's current account. I have already did the P account. Okay, you can do the current account individually. So you can put your current account for stay or current account for home, but I just do the one current account, and this current account can be shared between these two persons. Stay home. This is like the cash book question, where you put here cash and bank. If you have three person or three partners or four partners, it's not appropriate for you to do like this, because it will be very wide unless you have a very neat handwriting and the space is enough to put all the 4 or 5 people into one account like this. So it's okay, I still can accept the answer. But if the answer is sort of rubbish, so I'm sorry for that. Okay, so stay home, this is debit. Stay and home here is on the debit side. The stay and home here is at the credit side. Account, we just put the balance. So look at the current account over here. We have debit and credit. debit for stay, credit for home. So this is 30,000 debit for stay and credit for home 10,000. So balance CD. What is that? Okay, okay. Stay is 30,000 and home is not balance CD, it's balance BD. So is 10,000. Sorry, got distracted. 30, 10. Okay, 30 and 10. Remember, for current account, the credit side over here, will make the partners richer. Everything that they receive, you put over here on the credit side. While at the debit side of the current account, here will make the partners poorer. So whatever that they need to pay to the partnership, so you put it here. So now we start from, of course, I know that you love to make the partners richer, so you will start at the credit side. So what the partners receive. The first one the partners receive is the profit sharing. So the profit sharing is, okay, for stay 2432 and for home 3648. And then what else? What makes the partners richer? The partners richer are rich when they receive interest on capital that they have contributed to the partnership. So the partnership pays them. So the partnership pays them. They receive 1,500 for stay and 6,000 for home. Interest on capital. So interest on capital for stay, interest on capital 1,500. As for interest on capital for home is 6,000. So this is what they receive from the partnership. Remember, the profit and loss appropriation accounts, only shows that on behalf of the partnership what they receive and what they need to pay. As for the current account, you only concern of the partners, because the current account for partners is only for the partners. So you only concern what they receive and what they need to pay. Okay, continue. For what they need to pay when they've been charged on drawings. So interest on drawings. So the interest on drawings stay in charge of 930, while home in charge of 1,150. There's another one, drawings. So we put drawings here as well because when the partners did the drawings, they will not, or it's hard to them to pay it back, because they think that's their money. Okay, for drawings, how much they do? So they did the drawings of 9,003, and for home the drawings is 11,500. Now we do the balancing off. Okay, the balancing of which one is higher? I stay at the debit side or stay at the credit side? Of course, we can see stay at the debit side is bigger, 40,220. So I make it as a base. So if I take a look at here, it is not enough to make it until 40,230. So this must be the balancing figure. Balancing figure is my balance CD. So balancing figure, I take 40,230 minus 2432 minus 1005. I got 36,298. While for home, this is 11 plus, okay, this is 12,000 something, and this is more than 12,000. Okay, this is bigger. So this is bigger. This I make it as a base. Okay, so this will be the balancing figure. Balance CD. So I 19 minus these two, I got 6998. Well, that's it. We have finished the all three questions. That is statement of profit and loss accounts, statement of profit and loss appropriation accounts, and also partner's current account. So I hope you can do this revision. You can look over and over again, and maybe inshallah if I have more time I will try to do the next video, maybe with the same topic or maybe with the other topics. Okay, till then, see you. Bye. Assalamualaikum. Stay home.